Yeah, Andy, this is a really good time to do this interview. Your gold's had a significant correction over the last 2 days. Gold's down $150 yesterday, down another, I'm not sure, but we trended all the way down to 4,600, 4,605. It bounced a little bit, 4,635. I think we started the week at 5,000. Um, s- so, yeah, big correction. And I really am, the timing's beautiful for this because both me and you, we're educators more than anything else. I mean, I'm an investor. I basically invest in gold and silver mining stocks, but I'm also a teacher. I've written a book on how to analyze these things. I'm on Twitter. I'm always trying to educate people. For me, it's all about education. So today's a really good opportunity for us to let people know why silver's going high, why gold's going higher. Silver's just a ride. I want everybody, that's one thing I always say. This is a story about gold. So we're really talking about gold. Gold trends higher, silver's coming along for the ride. It's pretty much that simple for silver. I've always said that. The GSI went to 120. Everybody said this is, it's going to stay there. I'm going, no way in hell. It's going to, gold goes higher. The GSR is going to squeeze. It's very simple. The odds of that happening are very high. I have the microphone. I'm going to keep talking. So I want to start talking a little bit about why gold's going higher here. I want to start all the way back to 1945. I'll do this fairly quickly. But from 1945 to 1971, the U.S. had a mercantilistic economy. 1971, August of 71, Nixon took us off the gold standard. From that point forward, everything started to break in America. That's the reason why gold's going higher. But we have to look from 1971 to today to really understand why gold's going higher. So the 1970s, we had the inflation, we had the two energy crisis, we had the stagflation, we had the malaise of the Carter years. And then 1980, Reagan comes in, and Reagan makes two fatal mistakes for the future of America. The first fatal mistake he did was globalism, which we're all realizing just basically destroyed the American economy. I mean, we're not going to recover from this. Globalism destroyed us. We're seeing it with the cost of living, and the middle class is basically getting hollowed out. You can't afford a house anymore if unless you have your parents are helping you out. So globalism was a terrible mistake. We thought we're going to have a services economy. Didn't work, right? The second thing that Nixon did was he created voodoo economics, which George Bush eloquently and masterly defined, which was spot on, but everybody ignored him. And what's voodoo economics? Voodoo economics is this idea that you can print money, but printing money is actually theft. You're just stealing from consumers, stealing from, hard workers. Money is supposed to be created through wealth creation, which is what mercantilism did. That's wealth creation. We didn't have to print money. You could, but the whole banking system is flawed, and that kind of builds into it. Basically, it amplifies money printing. For instance, here's a good example. So I go and deposit $10,000 into a bank. A bank can take that $10,000 and basically multiply it by 5, 6, 7, 8. I'm not sure what the number is, and then make a loan. Let's say you have a home equity loan. The home equity loan is collateralized against a lien against your house, and then they get 14% interest. So they make a loan out of thin air, and then they get paid back 14%, which is double the loan. So you get a loan at $25,000, you pay back 20 years, 14%, you pay back 50,000. They get a 50,000 in free money, and that's how our banking system works, which is, it's basically ludicrous, I think. So that's breaking the system on top of it. And then now let's go a little forward. Okay, so Reagan started doing deficit spending, which is during a period of growth, which is exactly the same thing we did from 2010 till now. We had growth. We haven't really had a recession since 2009, and yet we've had the deficit's grown from about 5 trillion in 2000 to about 39 trillion today. So we have $2 trillion deficit, and we're borrowing about $1 trillion every 6 months. Our deficit is increasing. So we're reliant on debt. And where things really broke, this was all building, printing money, living off of debt, when we basically weren't living off wealth generation. We're living literally off of printing money. And this was a doom loop. This is the reason why I got into gold, because eventually it pops. Von Mises said it so well. He said there's only two ways to get out from under a debt bubble. You either pay it back, which we can't do, or it bursts. And so what's happening, and we knew it was an inevitability, and now everybody starts to realize it. So what happened was February of 22, the Ukraine war started. And from 22 to 24, everybody kind of ignored what was going on globally, where you had Russia and you had India and you had China basically all becoming buddy buddy. These are natural enemies, and they're becoming buddy buddy economically, creating basically the global south, which Andy talks about all the time with the BRICS Plus, with using gold as a final settlement. This isn't going away. This is actually expanding. So 2 years from 22 to 24, everything was kind of fine with gold. In February of 24, gold was $2,050. Then in February of 26, 2 years later, it was 5,600. Well, January 29th, and then it went down a little bit after that. January 29th. Let's call it 2 years. It went up $3,600, $1,800 a year. Why? It didn't go up $1,800 a year because we had inflation. Inflation was going down. Had nothing to do with inflation. It had to do with everything I've been explaining to you. It's all about debt. It's about this debt bubble bursting. And the key here is once the US's debt level got too high, which is what it did, at that point, you get into a doom loop where it's impossible to get under control. When it's impossible to get under control, what you end up doing is exporting inflation. Because when you're printing all that money, the more you print, the lower value the currency becomes. And printing money is basically a monetary phenomenon. So when you print money, you create inflation. And we're printing money, like banshees. And so China figured this out in 2013. In 2013, China held 1.5 trillion of our bonds. Since then, they've had a net. Basically, they bought a little bit. They sold more than they bought since 2013. Now they're down to about 650 billion. They figured it out a long time ago. They can see where it's going. Now everybody else has figured it out. And that war in 22 figured it out. So gold is going higher, but I'm only giving you a little bit of an overview of why things are breaking. The bad news is that where we're going forward, we're going point forward, but there's no path forward here where silver dies here at 4,600 and just doesn't go back up. The reason why we're at 4,600 is because of the war, plain and simple. The war basically was basically a trigger for gold and silver to take off. Very common. You get a crisis, gold goes down. We've watched it over and over again. So we're in a crisis, gold's going down. Now, I said that we were going to see probably $4,500 gold, 4,800, somewhere in there before the end of June, and we'd see around 72 silver before the end of June. We're already there. So now we're going to go a little lower. I bought gold and silver mining stocks today. I bought the dip. So we're going lower. You never buy the bottom, right? So we're going to go lower. The question is how much. But we're in a situation now where we can buy to the bottom. We can look for stocks on sale, and we can buy them now and just keep buying them because we're going to hit a bottom here. We're going to bounce. I firmly believe gold and silver will have an all-time high by the end of June. The reason why Jordan Byrne did a look back on gold and silver, and he basically, especially gold, he found that in a gold bull market, the longest correction was 5 months. And 5 months would be, it started, basically February 1st to July 1st would be 5 months. I think that's probably history's gonna rhyme there. I'm not worried at all here about gold dying, silver dying. Yeah, silver could go back to $50. It's possible. We're at $70 today, 72. It's possible because the S&P 500 is just starting to roll over. One last thing, Andy, I want to talk a little bit about how we got to where we're at. So I called it 4 battles to win the war. The first battle was gold breaking out, which was February in 24. Gold won the battle. February, March of 24, gold was off to the races. It was very clear, I thought. First week of April, I went bullish gold. The second battle, it took another almost 18 months. It wasn't until August of last year. That's when silver broke out from $35 and ripped and just took off from 35 to 70 by the end of the year. The third battle was the HUI, which broke out with silver. The fourth battle is the battle we're fighting right now. And that battle is the S&P 500. And I always said that the last battle is going to be the ugliest, and it sure is. This is the final battle. So this is when gold and silver decouple. This is equivalent to 2002, that period, 2002-3, when gold and silver started outperforming the stock market. That's what we're waiting for, that same thing. All right, Andy, I'll let you ask me a question.
Uh, Well, you kind of stole a little of my thunder. I got to admit, Don, I had a bunch of questions to ask you surrounding what you talked about, so I'll have to kind of shoot from the hip on this one. But let's make it easy at first. You alluded to it. Um, the fact that we've seen war in Iran and oil above $100 and a stronger dollar. Yet gold and silver, after this initial fear bid, have turned weak and choppy, and that confuses a lot of people. So you kind of touched on it, but let's start here. Is this just noise and start a much inside of a, I guess, call it a much bigger bull market, or is this something much more important happening underneath the surface? I think people would like to hear your answer on that.
Yeah, that was the reason why I entered my overall explanation. I think I kind of answered that through that. But one thing I want to point out here is that the final battle, I believe, has been building for years, really. I mean, if COVID, we spent $4 trillion and injected $4 trillion in 2021, 2020 from COVID. And that all that money injection just kind of kept everything afloat, if you will. I think we probably would have went into recession without that. But now, I mean, if we look, this final battle is all about basically going into a recession. And that's where gold is going to shine. That's when gold's going to win. I mean, all I have to do is look from 2000 to January of 2000, the dot-com bubble burst. And then September of 2001, we had 9/11. And you had a recession out of that. From 2001 till, the entire decade, stocks pretty much sucked. They really did. They did. If you were fully invested in the stock market in December of 2000, you didn't make any money for the whole decade. And so gold and silver do well. So we're waiting for that. So if we look at the factors right now, the factors that we haven't gotten into a recession yet and how close we are. Okay, if you look at consumer confidence, Michigan number, it's at 55. The all-time low is 54. As far as the consumer is concerned, the economy sucks. If you look at the cost of living, I would say 50% of families can't pay their budget. They're cutting something out. That's my point. If you look at the Buffett indicator, that's been screaming for a long time, right? That's basically the valuation of the stock market versus GDP. If you look at unemployment, the unemployment rate, went from 2% all the way to 4%. That's usually screaming at recession. The inverted yield curve, 10-2, that normally points to a recession. This recent oil surge, anytime you have an oil surge, historically, you get a recession. The SOM rule was kicked in. That normally says you're going to have a recession. The LEIs, those have been, telling us recession. The ISM numbers, 38 out of 48 months, sub 50. And then the housing problem today, right? Housing is a total mess. The inventory is going up. Nobody can sell their house. So everything is pointing to a slowing economy, going into recession, which is more fundamental strength for gold because you had about $70 trillion in the stock market, the total stock market in the United States, about 70 trillion, maybe a little lower than that. Now we've had a 5% correction back down to 65 trillion. Well, guess what? About 20% of that is foreign money. And that foreign money right now, I've said, going into this year, I said, what's going to happen with the stock market is you're going to get stuck in a trading range. We're not, because there's nothing to really drive it higher. Coming into this year, AI basically was down, and AI has been down, right? We had this rotation. So if you don't have the AI, generator, what's going to push this thing higher? So I thought, you're going to get into a trading range, and you get into a trading range. Eventually, you're going to get a correction, which we have today, down 5%. And then that foreign money, that $20 trillion starts leaving. And then the retail's is hot money as well. They'll leave too. And then basically it's just kind of, you get into, and then kind of self-fulfilling prophecy, which I think is inevitable. I said it was going to happen the second half of the year, but it looks like it's going to happen the first half. We'll see what happens.
I guess tied to what you're saying, much of which I agree with, it seems to me that the central banks, the U.S. central bank, Federal Reserve, more than any, but all of them for that part, for the most part, seem trapped. They want to ease, they want to support growth, but as you alluded to, inflation and energy keep taking that flexibility away. It's very obvious. I assume you feel that the central banks are trapped here, that they can't raise because they'll break the system, and um, if they don't, then inflation perhaps runs away. Are they just out of room at this point?
You're being very kind to the economy, very kind. You're actually saying you're actually giving them a chance. No, they're absolutely trapped. And there's no way out of this. The debt bubble has reached a point where there's no way out. And now we've used this term "kick the can," right? And kicking the can was always injecting money, injecting liquidity, bailing companies out, expand the debt. You know, when Greenspan was in office, Greenspan didn't leave until 2005, and Greenspan was kind of old school. When Greenspan left, the Fed's balance sheet was $800 billion, which is low, right? 800 billion, it was like peanuts. It was kind of the equivalent of Reagan when Reagan came in. It was under $1 trillion. The Fed basically was under Bernanke, kind of old school guy. He was like, okay, we're going to keep kind of doing this thing, the same thing. Bernanke came in 2006 and flipped the whole thing. He basically was pulled a Reagan, and he started printing money. He introduced MMT, and so he's the guy that basically rug pulled the Fed. So now the Fed has $7 trillion balance sheet. So he's basically 7x Bernanke, uh, Greenspan, and now he's put that in motion. And so now the Fed is like, oh, we can just do what Reagan did. We can just expand our balance sheet. We can just print. We can, and people have talked about the Fed expanding their balance sheet to, 12, 16, 20 trillion and kicking the can, and everything's going to be fine. The problem is inflation. They can't do that. They can't inflate their way out. And so what's going to happen? They're absolutely trapped because they can't print like as much as they want to. It's very similar to what happened to Japan in 1989 when they basically had their bubble burst and all that foreign money left. The Japan stock market in 1989 was 50% of the global stock market. It's 50. We're about 60 today, and it collapsed down today. It's five today. So that's going to happen to us. And so their central bankers, they tried to print. They tried and tried and tried, and they couldn't get their economy growing. They call it the lost decade. It's going to be the same thing for our Fed. It's going to be like pushing on a string. So Kevin Warsh, he's known as not being a uber dove. So he's going to print, okay, I'm going to print 1 trillion. I'm going to print 2 trillion. I'm going to print 3. But he's not going to print 5 all at once, because he knows if he prints 5 all at once, he's going to create 5% inflation. 5% inflation kills your currency. So he can't print at will. He can print on the margin. The other thing where they're trapped, they can't cut rates severely. Right now, for instance, they didn't cut yesterday, and they're like, oh, we can't cut. We have high oil prices, right? How in the heck are they going to? Inflation's not going away. So how in the world did they get the Fed funds rate down to 1%? Which is what they need to restart the economy. So you can see what I mean. Yeah, you're being kind. There's no way out here.